No. Test, test. Can you hear me okay? Okay, we are live. That means I should start sharing my screen. Hopefully you'll be able to see what I'm about to share here. Give me a moment. Lost my Zoom. There we go. Welcome everyone to the weekly market update. Hey, Gary, Angus. Yeah, great, great, great. Uh, this is a really interesting time to be getting together and talking about what's going on with the markets. Uh, I gotta hopefully share this with you in a way that is going to make a lot of sense. All right, on the screen, I'm looking at this big red down bar in the Nasdaq 100. Right, this was this was a big bad day in if you're a bullish market. Yeah, waterfall. All right, just it's just yeah. And what's interesting about this is, let's see if I can show you this. This is a 5-minute chart. So the market opens and we're going along, and then boom, down we go. But not just down, then for a while, and then the last little bit, it rushes down even further, closes down on the low. When I see something like this, I usually expect there to be more to follow in the next session or something. But I really wonder whether or not it will turn out that way. I want to show you a few charts to see um, why that might not be the case. Why we might get a nice rebound from this when the market's open. So what happened, of course, the news is that China had said something about, hey, we're gonna raise the cost of these rare earth materials, and then here comes Trump back saying, "Oh yeah, you do that to us in the United States, and we're gonna just jack up the tariffs on China." And so people are like, "Oh, we're back to this tariffs. Oh no, yikes!" And then the market um, reacts this way. And because that's USD, because that is the general idea, then what we take from the market action is that people, investors, are concerned that the value of stocks in the U.S. is not as strong. The companies won't be able to make as much profit because they won't be able to get low cost items in the US from China. China buys a lot of goods from the US, and if all of a sudden tariffs go up, then people buying those goods can't make as much profit, and therefore stocks aren't worth as much, at least US stocks. That's why you see the NASDAQ going down. But then you have to ask yourself, okay, nobody really knows what will happen or how those tariffs, if they do in effect go into effect, how they'll actually play out, right? So it's all just speculation, just speculation. And it's all just talk at this point, right? So, so it's really fascinating to think that this is the reaction people investors are making over the prediction of what's going to happen. So, if we look at the euro, what happened in corresponding fashion? And the answer is the opposite, right? So, European um, uh, fortunes look better compared to US, and therefore you get the currency, the euro, rising compared to the US dollar, right? So that's interesting. So how to profit from this whole mess? By the euro, right? That's what the message seems to look like. Uh, and it's also interesting to look at the yen, the US dollar compared to the Japanese yen. It looks a lot like the US market, right? I want to show you something interesting. I have mentioned before that the correlation between uh, the U.S. Japanese yen dollar and the U.S. markets is pretty good, but that an even better correlation between the Nasdaq and the um, and a currency comes from the Aussie yen pair, Australian dollar and U.S. dollar and Japanese yen pair. Now let's see if I can show you this comparison. And you can see why right here in these circumstances. You'll see that if I look at the daily chart, here's the NASDAQ going up, boom. Big, this is the biggest red bar we've had, well, since the last time people got worried about the tariffs. Okay. So which of these looks more like the U.S. stock market? This one or this one? Right? Bigger downward move compared to the days before than the US DJPY. Okay, yeah. See, this one comes down, takes out, you know, 2.5 candles, right? But this thing takes out a dozen candles. And if I go over to the Aussie yen, it takes out, well, not a dozen candles, but those three, and then back into that, goes clear back to that gap. So this is strengthening my point of why I believe that Aussie yen is a better, you know, similarity, better correlated market. It's not exactly, but I mean, hey, look at that. It's going up, 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 and then down, up, and down. So whatever is going to happen next, if in fact we thought the NASDAQ was going to rebound and come up, then we might expect that same action on the Aussie yen better than the US yen, right? Now, if we try to do meaning here, if we try to say, oh, well, we can explain this because the Australian yen is the Australian dollar, which is a currency based on a country with a lot of commodities, and compared to the yen, which is a lower interest, and so Australian dollar commodities. Well, it's also Australian market, uh, China, the exports to China, and China exports to the U.S. And if China can't export to the U.S., then they can't import from Australia. So there's this, sort of once removed kind of thing, right? you can explain that, but you can't explain the intensity. Why is the Australian dollar going to get nailed so much heavier than the US dollar and the Japanese yen, right? And you can say, well, investors believe that the Aussie yen is worse off under these circumstances. Okay, whatever. Uh, as technical analysts, we have less patience or concern with knowing exactly why, because it can't, the why behind it doesn't always make sense. It's whatever the chart is telling us. So what the chart is telling us is, hey, Aussie yen is looking a lot more like the U.S. Stock market, and so vice versa. And so pay attention to the correlation. If in fact we expect the U.S. Market to rebound, we will probably see that happen first in the Australian dollar Japanese yen, because it will open before the US market does. So suppose what we see is, a small green candle starting up. Well, it's not going to run way up. If in fact we were to see a big up day, taking half the candle back, as people say, oh, that's an overreaction. Hey, that's a good price. Let's buy stocks now because we think, if in fact investors decide to buy U.S. stocks and they create this big green candle that's at least half the size of this or better, you probably won't see all of that happen before the U.S. market opens, but you will see a little bit of a green candle open, and then futures up, and then that sets the stage for more going up the rest of the way. Of course, who knows? It could easily just as easily turn around and go down more. But my point is that I think you'll see a little bit of telegraphing with the Australian dollar. Oh, sorry. Hopefully you can hear me clearly enough. I'm concerned I've had the wrong. Oh yeah. Oh, good. I did have the wrong microphone on, but that was good because I had it in the wrong place. Let's see. I don't know if that's any better, but hopefully you can still hear me. So watch this. Watch this space, right? Now I kind of think that there will be a rebound. And the reason I believe that rebound will come is that nowadays we have a 24-hour market that we can look at. Bitcoin. And unlike everything else, which is closed, Bitcoin is still trading right now. And so on Friday, Bitcoin goes down, big and bad, which is really weird if you think about it. Bitcoin compared to US dollar. Bitcoin's on the other side of the US dollar. So why would it be going down, right? But it does, because, US investors, pull their money out of assets, out of risk. So Bitcoin is a nice proxy for risk behavior, or, just overall investors, whether or not they're in the mood to take a risk. And on Friday, when the U.S. markets tanked and currencies, U.S. currencies tanked, down it came, Bitcoin. And so we know, all right, it's acting at least a little bit like the stock market. Big down day. Continues on after the market's closed, going down a little bit. But look what's happening right now as we speak. It's kind of rebounding. Weird. If yesterday was such a big bad day for the markets, why would anybody want to be buying that? It's risky, right? But the answer is people are willing to take the risk. It's kind of near the support area on Bitcoin. So I sort of expect that we'll see a little bit of a rebound. The big question, will it rebound heavily? Will people jump in and buy it up? Well, the answer is going to be keep an eye on Bitcoin, see if people are in the mood to take a risk. Now, if they are not, if investors are not in the mood for a risk, then where do you go to capture the gains? Okay, the answer is the euro, buying the euro, going long euro USD. If in fact Bitcoin starts coming down lower, if this candle turns red and you see it start pushing into this area, well, that would be a good sign to go long the euro, or go short US dollar, Japanese yen, even better, go short Aussie yen, the Australian dollar, right? Notice also the stocks that did worse or better. So this is an interesting one here. The one that did the best yesterday is Duke Power. And, I had sent out a trade recommendation on early Friday morning. It was interesting. I sent this email out and told the people that, follow me on email. I really want to short something. I'm a short, there's a bunch of things I feel like I want to short, but Edge Finder, the Edge Finder signals I have in my brain, I can't really agree on exactly what to do. And this, I sent that email out about right in here. And I wish I just had the courage to say, yes, go short on, one of these stocks. I didn't. But what I did say is, well, let's play it safe. Let's buy Duke Energy. And at the time I did, it was like 126. I think I said it was just below 126. I said, 126 or below, buy it. And then, well, nice move, right? How did I know that this would be a good stock to buy? The answer is what kind of company it is. It's a power company and it's a utility, so it pays dividends. It's a stock that doesn't move a lot, but it pays a nice dividend. So when investors get scared, they tend to buy stocks like this. And so it was a safe play. If the market goes crazy, money tends to go here. And even if it doesn't go up, it doesn't go down as much. And so that's why, I didn't know what to pick on the downside. I just knew that for the upside, that this would be a place where money would run to hide. And that turned out to be, a really great call. If you're a stock buyer, you remember this tip. If the markets are going bad, look for a utility stock that people will feel like they can trust. And that's a good place to go try to buy a stock. And so that was DUK, Duke Power, Duke Energy Corporation. And it's probably one of the biggest, best utilities in the US. But in terms of currencies, it's a little trickier because it depends on what's going on, right? In this case, yeah, the euro was the opposite, and so looking to buy the euro. If in fact it's going to keep going, that's buy the euro. If you're looking for other stocks, though, that not so much whether or not to buy stocks. Let's look specifically at which stocks did better and which stocks did not, to get an idea of where the market is putting its risk. Wants to buy stuff. So Duke, T-Mobile, the telephone company, cell phone company, T-Mobile did well also. Part of that is that, T-Mobile pays dividends. But it's interesting that Verizon did not. Verizon went down. Why is that? Well, because Verizon's fortunes are very closely tied to Apple's, and Apple went down, right? Like everything else, it went down. Now, the NASDAQ was down 3.5%, and Apple was down. The charts look different, right? But in percentage terms, Apple was down almost exactly the same as the NASDAQ. So investors are not looking at Apple as more risky than the rest of the market. It's just pretty risky, which is interesting because Apple has a lot of, connections to China and the Chinese market. But Amazon down here was off for almost 5%. Big, huge down, right? So from this, we extrapolate that Amazon has more risk compared to tariff issues than Apple does. And that's kind of interesting. You wouldn't necessarily expect that because both of them are heavily connected with the Chinese market. But going even further down, you got Taiwan Semiconductor, which really took a hit. American Micro Devices, which had just had this huge move up and now took a big hit to the downside. PayPal, fell almost 8%, and Shopify. Yeah, well, so these are what investors are telling you have the biggest risk in tariff related issues, right? Shopify is down 7.4%. If we go and look at the 5-minute chart, we could see it was weak to begin with. Because unlike the rest of the market, which started off okay and then dropped, this had already started dropping. So part of this is that investors think that there's issue with tariffs. The other part of it is investors just feel like this company's got some problems or something that's reducing its value. By contrast, the Nasdaq's down 3.5%, but IWM, small cap stocks, are down only 3%. You would expect this one to be down even further because more risk. No, not so. Because not all of them have the same risk, and lower interest rates are coming, and that helps small cap stocks. And there are small companies that could fill in the gap on tariff situations. So if in fact we're going to rebound, then small cap stocks are probably a good place to go looking, right? And then of course, don't forget, there's gold, right? So GLD was already having some, fluctuation, and then all of a sudden here comes the tariff news. But then it comes right back, and then it goes back up again. So the gold market is not a haven. It's not like the euro. It's not like a utility company, as far as investors are concerned. It's back and forth. Investors aren't quite sure what to make of gold's value in a tariff situation. Oddly, gold had the big sell-off the day before, and with the tariff news, it rebounded a little bit because some people do want to move their money to gold. Sort of like what we were seeing with Bitcoin, right? Bitcoin dropped, but now it's kind of rebounding. People are just looking for places to move their money from dollars to something, well, gold, right? Okay, so I feel like that's probably as good an idea as any to look for. First, what is Bitcoin doing in the next 24 hours? Watch, what is Bitcoin doing? Second, what is the Aussie yen doing as soon as the currency markets open back up? And if in fact both of those are down, look to buy the euro, make bullish trades on the euro. If in fact those are up, look to short the euro and then watch the US markets. If in fact US markets are going to rebound, as a currency trader, you could probably make the most from shorting the euro USD. That would be my guess. Now, how to short the euro USD specifically? I mean, you could also, just simply play with the Aussie yen, of course. But let's look here how we could put together sorry, that's daily. I want to go smaller time frame. How we could put together an excellent euro trade if in fact we were going to go long. Well, how about we do something like a 1 hour candle? The euro's been on this slide. And if in fact the US market's going to tank and struggle, then this thing's going to go up because of the situation, because of tariffs. Downward move, and then all of a sudden now it's going up. Well, I think the risk is right here, just in that little move right there. In other words, if you're going to go long, if we're going to go up on the euro, we should hold this level, right? But then where are we going to go? Well, easy call is that level or higher. But what's so interesting to me is the fact that these are equally distant, right? That's your risk, that's your opportunity, and it's 1 for 1. That's where the euro landed, was right in the middle of, support and resistance. That's kind of interesting. But it does validate the setup of that trade. And so if you're the kind of person who likes to win a lot, give yourself a little more room and take a smaller target. You'll increase your probability of winning. If you're somebody who likes to have big wins and want to play the trend, the change of trend, this is going to go on for a while, then do something like this. Target that kind of move. That'll take longer to play out, but it'll come along. Personally, I'd feel a little nervous about this because the whole tariff thing is really a wild reaction, and it doesn't last long. The market kind of settles down, figures out. There's the other little phrase that somebody came up with a few months ago. Taco, Trump always chickens out. Talks big, but then doesn't follow through. See, it's really interesting to me that Trump comes out and says this, and the market didn't think he was going to chicken out. The market, that's sold off like, ooh, yikes. That's not expecting him to chicken out. That's expecting him to do something. So I don't really know quite how to read the possibility that they will not follow through. But it might be the case that if the market thought he was really going to follow through, it would be down a whole lot more. And that's valid. That's a valid idea, because if you look at where the market was when they thought Trump was going to do serious tariffs for a while, when in fact he did do serious tariffs for a while, I mean, that's where investors took the market. So if in fact they thought he was serious about jacking up tariffs, then it should be down here, down into this range. So the fact that he just went there sort of says, well, he's probably just bluffing. He's probably just, playing cards, and that tells you that if in fact he does carry it through and somehow signals that this could last a while, but that's the risk, that whole downside area. And that's like about a 10% risk more of the US markets. So there's a potentially huge move there, which of course means a huge move up for the euro, because where was the euro back in April? Yeah, well, it was all over the place, right? But it got as high as up here. And or even there just recently. So if in fact all of a sudden the Eurozone's fortunes are going to be better than the US's, well, there's that much room for profiting from and trading on the euro. So that's interesting. There's easily that much room to go if in fact you would be right in predicting the tariffs and the fact that the tariffs are going to keep going. I just spent the past couple of weeks in Northern Europe, actually. Got to see Leon. Yeah, went and had an afternoon tea and cookies kind of thing with actually, okay, he had coffee, I had hot chocolate, and we had Danishes. And anyway, I got to sit and chat in Copenhagen with Leon. It was a lot of fun. Good to see him in his stomping grounds, and we had a very good conversation before I had to run back to the cruise boat. But yeah, so I was out there on a cruise, and I went to all these different countries, starting in Norway, Denmark, Germany, Poland, the Baltic states, up to Finland. And you know what surprised me about going through that whole area was how many cranes I saw in each of the major cities. Yeah, like construction cranes, the big kind that in the downtown areas, there were several to be seen. And that's usually a pretty good sign of positive economic development carrying on, especially in the Baltic states. That was true. That is Lithuania, Latvia, and so Klaipėda. We're just the port towns, Klaipėda, Riga, and Estonia, or Tallinn. Anyway, cranes all through those areas. And, fundamentally, if you need a reason to believe that the Eurozone's fortunes could be good at all, then, hey, if the trade war happens between China and the US and confusion happens there, well, things are actually doing in at least northern parts of Europe. So maybe that could be a reason why you'd see a lot of potential fundamental strength in the euro for weeks to come. Either way, the short-term answer is watch Bitcoin, watch the Aussie yen, get an idea of how the market's going to carry on, and play the euro long or short, whatever you think the reactions are working out with. For my part, I think that there's going to be a lot of fluctuation, a lot of back and forth as people sort of figure it out. So I like this kind of a trade where you risk this much, but you take a quick profit. And then you come back and do it again over and over. Risk, what's that going to look like? This looks like risking 25 pips to make 12 pips. This is on an hourly chart. But, do that over and over again. Any questions before we wind it up today? Just looking at the chat, type in a question if you got one. All right. Well, I wish you good trading in the week to come until we do this again.